Welcome to Man in America, a voice of reason in a world gone mad. I'm your host, Seth Holehouse. So as you can see or not see, today's interview will be an audio-only discussion. My guest today is Eric Yeung, coming out of Hong Kong. He's a very, very important voice on what's happening with precious metals around the world. And for his own safety, he does not put his face on screen, which I don't blame him for that. I do. Maybe that will be my downfall, the fact that everyone knows exactly who I am. But, that's just how I do the show. This is me. I'm real. So anyway, it's going to be an audio-only discussion. But we're going to be getting into the bigger picture of what's happening with silver, and not really as an investment. We're looking at silver and analyzing it through the lens of geopolitics and through the lens of the fracturing of the world and the ending of the unipolar world with the United States as the dominant empire, and splitting into really the U.S. and the Western nations on one side and the BRICS nations on the other side. And understanding what's happening with silver gives you a lot of insight into what is happening. And there's some big news we'll be talking about, a massive silver smelting facility that the DoD, in partnership with JP Chase, is building in the United States. It's a $7 billion facility they're going to be building. So we'll be talking about that, talking about silver prices, which are now, as of recording, at around $81 an ounce, which is crazy, but also explaining in detail the mechanisms that have been used to suppress the prices of silver and gold, and how those mechanisms tie into the strength of the dollar, but also the de-dollarization that is happening, and how those mechanisms collapsing highlights the dollar's real place in the world, in addition to countries around the world dumping treasury, not buying U.S. debt anymore. We're seeing a lot of writing on the wall, but also then getting into the AI, the AI race, the AI arms race, you might call it, and so much more. So I hope that you enjoy this interview with Eric. He's a smart guy. Just a quick note, sorry I've been a little quiet over the holidays. We've got a lot of really exciting things that we're working on, which will be rolling out soon. But also, in the past couple of months, I lost my grandfather and my father, in a very short period of time heading into the holiday season. And I, to be honest, just felt like having a quiet holiday. And it was really nice to have a lot of quiet time with my family, to pull back and work on some more creative projects for what we're doing. And just to have that silence that was really nice, to reflect on this past year, reflect on the year coming up, the state of America, where the country is heading. And so you'll see over the course of the next couple of weeks, there's going to be a lot of updates coming out. The ARC community is still being pushed forward. Again, the events of the last quarter of last year kind of slowed things down, but this year we've got the book coming out, we have the community rolling out, we have some other big updates. So I appreciate your patience. I appreciate you sticking with me. And we're going to have an exciting year together. I can assure you of that. So enjoy the show. Eric Yeung, it is great to have you back on the show. It has been quite some time. A lot has happened, but thank you for being here with us today.
Well, thanks, Seth. It has been a while. I think the last time I was on your show was around the end of February of last year.
Yeah, I mean, almost a year ago, right? We're approaching a year ago, and so much has happened. But before we jump into today's discussion, do you just want to give a little bit of your background? And I'll tell you just quickly, I kind of perceive you. I know that you're in Hong Kong. I know that you understand geopolitics, finance, especially precious metals, extremely well. And I've always appreciate you. I follow you on Twitter. It's King Kong 9888, and you've always had a very, very, I think, just wise perspective on what's happening with precious metals. And I think you do a very good job of bridging the dialogue of what's happening between the East and the West, which is, I think, very important in understanding what's happening right now. But anyway, I'll let you just give a quick background to yourself.
So, Seth, I've been in the contract manufacturing business for over 2 decades, and during this time, I've been based in Hong Kong. I also had offices in mainland China, primarily in Shenzhen, which is a coastal city of China that is next to Hong Kong. Okay, essentially. And if the audience doesn't know, contract manufacturing means that my multinational customers, let's say some of my customers are Fortune 500 companies in the US, they come to me, they have a specification for a product they manufacture. I take that, I go to China, I shop for the correct or the appropriate factories that can manufacture the product for them. I would oversee the entire process of manufacturing, and I would arrange the logistics to have that finished product be shipped out of China, cross Chinese customs, and imported into the US or elsewhere.
And how did you end up focusing so much on precious metals?
Well, I think the first time that I really loaded up on physical gold is right after the great financial crisis. So that really shocked me. I think it shocked a lot of people, more so than even the dot-com bubble. I mean, I was there. I was already working the industry. And when that popped, shocking, but you see, you saw that the system was intact. But with the great financial crisis, I saw that the U.S. some of these what they call too big to fail banks were failing. So that's when I really started buying a lot of physical gold. And the time when I really added to that initial stat was 2019, when Jerome Powell pivoted. Essentially from quantitative tightening to easing, and that's when I knew it was gold time, it was rock and roll. Like I got to really accelerate my physical gold and silver, and I started buying silver at that point. So gold started, massively buying after the GFC, 2008. I really, really added in 2019 to my gold position, physical gold. But for physical silver, I started stacking around 2019 when Powell pivoted.
Okay. And so I'll quickly bring up the charts. Yeah. So right now we're at, almost $81. So a year ago, our last interview, silver was, right around $32, which is, this is insane. If you look at, we're up 163%, up $50 in the past year. So this is wild. And so you're saying that, okay, let's just look at Max. So you're saying that that you were buying a lot, 2019 you started at silver, which was right at $15 an ounce, which seems wild to think about that low. But a lot of what I want to really pick your brain on is really looking at like this, say, past 6 months to a year of what's happening, where we've gone just in 6 months, silver's up 120% nearly, right? From high 30s to, again, over $80 an ounce. And there's a lot to dig into with this, because I look at precious metals as, gold and silver, not just, I don't look at them as like the way I'd look at a stock and say, oh, wow, Apple stock is up like this. I look at silver and gold as almost being these, well, as David Jensen has referred to, the canary in the coal mine, right? They're indicators of much more significant things that are happening. And so I guess just, in kind of diving into this, silver's at almost $81. What does that tell you about what's happening geopolitically right now in the world?
Yeah, so basically, Seth, I think what's happening is that, as we have talked about this off camera, has been for a while now, but the global South countries um, have been for a while not adding substantially to their US Treasury bond bills and notes purchases. So, what is the US Treasury bond bill or note? It's simply US debt. So, what we're seeing here is that, especially since the Russian invasion of Ukraine, after the US and the Western allies, the EU, froze Russian assets, the BRICS countries and the global South countries have really stepped on the gas to not net buy or add to these US treasuries if possible. So I think it reached kind of like a breaking point at this point. And everything that we've seen in the last 12 months are simply a symptom of that. Like the first time I was on the show, when we saw um, massive outflows of physical gold from the LBMA to the US and elsewhere, and also massive outflows of physical silver from the LBMA to the US and elsewhere. These are all symptoms of deglobalization of the rest of the world, primarily the BRICS countries and their allies, not no longer willing to finance the US government.
So basically, to summarize it in a way that my kind of simple mind understands it, is that post World War II, the United States became the not just the global police, but also the global superpower, right? And you kind of lead up into Bretton Woods, getting into the establishment of the US dollar as the global reserve currency. And so you had nations around the world that were buying US Treasury bonds, basically buying up US debt to kind of backstop their own currencies, right? As a reserve asset. Also because so much trade was being done in the US dollar. And that worked for a long time. And in exchange for these countries holding US debt, they had protection, from the United States. We had safe waterways for trade, et cetera, all the things that emerged really post World War II. But it's almost as if it's like if you give a teenager a credit card and say they're responsible for the first 6 months and it's going pretty well, but then a year later you realize that they've maxed it out. They're buying stupid stuff. They're spending it on video games and everything nonstop. It's almost as if the U.S. did the same thing. As the world saw that we were completely abusing the power of this US dollar to fund these endless wars, keep money printing nonstop. But then, as you mentioned, the tipping point was when Russia invaded Ukraine. And as a response to that, we then used this global monetary system that was built off the back of the US dollar as a weapon to punish Russia, right, by kicking them out of the SWIFT system and a handful of other things that happened at that time. And so that was the breaking point where a good chunk of the world that wasn't directly being controlled or allied to the United States, basically, as I understand, said, "Wow, okay, we're kind of done playing this game now. So we're gonna start selling your treasury bonds. We're not buying more." And you have simultaneously the strengthening and the growth of the BRICS nations. Really spearheaded, by China, right? Obviously, you have China, Russia, a lot of the other, handful of BRICS nations. Now, a lot of the Middle Eastern countries are showing strong allegiances to the BRICS nations, and so basically, we're looking at the fracturing of going from a unipolar world with the U.S. at the center to a multipolar world where the U.S. is now just a competing empire against this growing Eastern empire, which really extends beyond just the East. South American countries, a lot of Africa, et cetera. So is that an accurate assessment of what's happening?
Absolutely. I think you nailed it, Seth. I think that's exactly what's happening. That's why you see, what we see here, which is the US competing, like you said, with the rest of the world, especially the Eastern countries, the global South countries, the BRICS countries, whatever you call them, for stuff that they cannot print. Okay, like I'm talking about gold, physical silver. Soon it's going to be copper, uranium, platinum, anything that they cannot print. Okay, that they have to actually have physical mines and physical smelters to produce, they're going to fight for from this point on.
So is this also what you'd refer to as a capital rotation? Because I know that there's a few people I've been following that have discussed that, right? Where in a capital rotation event, that the capital is rotating between, in essence, kind of paper and digital assets to physical assets. And when the markets are strong, the banking industry is sound, you have a lot more people that are putting their assets into the paper, the digital, the markets, et cetera. But then when confidence has left those particular areas, that you have people, in essence, rushing into what they can feel and hold and what they know is real. So is that how you would also describe this, as more of a capital rotation, like a global capital rotation event?
Absolutely. It's just happening before our eyes, Seth. I mean, like you said, look at the price of silver. First time I was in your show is in the mid 30s, maybe, 34, 35, etc. Now, today, silver is at $80, above $80 at the LBMA and the COMEX. And it's actually almost at $90 US dollars equivalent in China. So we are seeing what you just talked about right before our eyes in real time.
And so this is, I'm glad you mentioned the difference in prices between the COMEX, LBMA, and the Shanghai Exchange, right? Shanghai Gold Exchange, SGE, right? And so can you explain that to us? Because that's something that I did a show on this, I think it was last week, and kind of dug into it a little bit, but it's not an easy thing to understand, but it's I'm sure you can simplify it in a way that it is. But what does that mean when you have a commodity that has global value, right? You can sell silver in I'd imagine most countries, what you can find a place to sell silver. It's not like it's like you're selling rare US signed baseballs, right? That would only have a certain market around the world that would be interested in those things. I mean, silver is similar to oil, right? It's a global commodity. So what does it mean when you have a roughly a $10 difference between two different markets? Because I would think that arbitrage traders, people that are looking for areas where they can buy in region A and sell to region B because there's a price difference, I'd imagine that they'd be looking at this saying, gosh, I can make a ton of money if I can buy in US and sell it for $10 more an ounce in Asia. And I think that mentality oftentimes keeps that gap very low historically, right? So can you explain to us what it means that there's this price difference between these markets?
So first of all, China is a manufacturing powerhouse of the entire world. And to be that manufacturing powerhouse for the last 2 decades plus, what does it need? Commodities like copper, iron, zinc, silver. Silver is a critical component for manufacturing, especially now that we are getting into Web 3.0 or the AI age, okay? With, stuff like solar power, electric vehicles, and, high power integrated circuits that would run AI. So back to what I just said, China being a manufacturing powerhouse. Naturally, China is a net importer of silver. And so is India, by the way. India, because like traditionally Indians, value physical silver as a store of value. Okay, as something somewhat of an inflation hedge, and also Indians have a culture of wearing silver jewelry. So India is also a big silver importer. Now, Seth, let me ask you a question. If you're importer of a critical commodity such as silver or precious metals such as silver, what have you got to do so that the silver would flow to your direction? I mean, I have a chart. If we remember, I showed this chart to your audience the first time I was on your show, and now I added the China and India bubble in the chart. Yes, there you are. So, in order for China and India to attract physical silver into their jurisdiction, they have to offer a higher price. Isn't that normal? If China and India have a lower silver price than the West, then who the heck is going to sell silver to China and India and lose money? Think about that. Does that answer a part of your question right there regarding the arbitrage?
Yeah. So basically, if you're seeing this price increase, say in China, I'm guessing what it means is just that their need to import it is greater than the other region, right? So they're going to be paying more of a premium to bring it in.
Because they are the manufacturers. They have an inelastic demand of physical silver because of their manufacturing, as I just mentioned. Okay? That makes sense? The only difference, I think, between now and before is that before you might have a $2-3, like around a 5% higher price of silver in China. Now it's like 10% higher, as you pointed out. So that's the difference. Like the arbitrage is getting bigger than before.
Okay. So while I have this chart up, can you explain this? Because I know this stuff relatively well. I'm even looking at this and going a little bit cross-eyed. So, but I know that what you're showing here is very, very important because, and maybe we can have a little bit of a, kind of silver and gold manipulation 101, right? And looking at what is the COMEX, what is the LBMA, what is an ETF, and what is this interaction and these numbers that we're seeing here? What is this mechanism that you have put together here?
I'm just going to say it in a very layman sort of way so the audience understands, okay? Because this is, like you said, this is a sort of a complex system that they got going on here. But basically what it says is the Western gold and silver price suppression machine consists of the LBMA, the COMEX, and the ETF. The LBMA is in London. It's simply a OTC, market over the counter, right? That consists of bilateral agreements between two parties. So it's not a futures exchange. It's just a place where buyers and sellers gather to trade the physical metals, supposedly physical, right? But your other guest, David Jensen, already explained to everybody that the LBMA is also flooded with paper contracts, which don't have any allocated metal behind it. Okay, so that's the LBMA. And then you have the COMEX, which is a futures market. And obviously at the COMEX, which is a futures market, it's not, the contracts are not one-to-one backed by the physical metal. Okay, if you look at the COMEX vault numbers, it's apparent. And then the ETF is simply things like the SLVs and the GLDs in the West, where retail investors buy these ETFs, and the ETFs go out and buy the physical metal. So basically, what this chart shows is that you have physical metals at all three locations, okay? LBMA ETF and COMEX. And whenever you have stress in one location, they would just move the physical metal from one location to another via the EFP mechanism, which is the exchange for physical. To lessen the pressure of physical demand at the location where there's a unusually high need or demand for that physical metal.
Okay, so I want to make sure I'm following you along. So the LBMA, which is the London Bullion Market Association, which was started in the 80s. I kind of look at it as being basically run by the Rothschilds, Bank of England. The COMEX, which is short for the Commodity Exchange, which is a division of the CME group, right, which is in New York. And then you have ETFs, which are, if I'm correct, is exchange-traded funds. Is that what that means?
Correct. Exchange-traded funds.
Funds
Correct.
Or futures?
Yes. It's funds.
Okay.
Yes.
And so basically, this mechanism, what this allows them to do, and I'm going to really try to simplify it in a way that I can understand it, is almost as if you have this one asset and you have one area that's kind of placing one bet in one way, the other area that's placing another bet in the other way to balance each other out. And you almost have this kind of interchange between those two areas that kind of balances everything out. This is very simple, but basically what it allows them to do is use this mechanism to keep the price suppressed. Because if it goes up, say in the COMEX, if it shifts a certain way they don't like, then they can do something in the LBMA, which then brings it back down, right? And then ETFs is kind of the mechanism going between them. So is that a really simple way of understanding how they've used this mechanism to keep the price of gold and silver at such lows?
Yeah, I'm going to add to this, though. I think you got it, but I'm going to add to this. I'm going to say that it's basically, I'm just going to simplify it again, okay? It's basically, just basically what it is, Seth, is a system where they want to flood like the entire system with paper instead of physical.
I see.
And then when somebody demands for the physical, because they don't have enough physical, right? It's not backed one-to-one, because they're flooding the system with paper to suppress the price, because the price traditionally derived from the paper trade. Okay, so they flood the system with paper so that the price is being suppressed. But then when somebody starts demanding for physical, that's a pressure point, right? If there's a huge demand, let's say for physical at the ETFs, they would use the EFP mechanism to ship the metal from the COMEX to the ETFs. So it's a two-way street, basically. Whichever location need a lot of physical metal, they would suck physical metal from the other two locations to help out that one location that is under the physical demand pressure.
Okay, that makes sense.
That? Okay, yeah, that's what it is. That's what it is.
So, because as of right now, on U.S. debt clock, the paper to silver ratio is roughly 374 to 1, meaning, as I understand it, again, in a simplistic way, that for every 1 ounce, 1 physical ounce, they're selling 374 paper ounces. People that have a piece of paper that says you own a physical ounce, but you don't have it in your hand because there's actually only 1 for every 374. And so as long as enough of those people holding the paper don't ask for delivery of that physical ounce, it works. It's the same thing as a fractional reserve banking system where you might have $100,000 in your bank account, but that bank may only have, say, $10,000 because you're not going to go ask for it all at once. Right? It's a simple way of looking at it. And so now, as I understand this mechanism, the LBMA and the COMEX are controlled by the West, right? They're not controlled by India and China. They're outside of that system, right? They're out of London and New York, which are really the two financial centers of the West, London and New York. And so they created this system in part as a way of masking the hyperinflation of the dollar caused by overprinting. And this is what David Jensen talked about, how in 71, when they first took the dollar off the gold standard, it allowed them to start printing the dollar as much as they wanted to. But you also saw, I think it was at 79, that silver had gone up over 300%, right? So you saw a huge spike in the value of gold and silver after they pulled the dollar off the gold standard. But that spike was being measured in the US dollar, which was being rapidly multiplied, causing a devaluation. So this mechanism is one of the tools they used to cover up and kind of mask the overprinting of the dollar. Because if you look at a chart of what silver or gold should be worth as it relates to the amount of money that's been printed, like the price of silver and gold would be astronomical, right, compared to what they are right now. And so looking at this and tying it to this bigger picture of this de-dollarization of the BRICS nations moving away from the dollar, you can see that if China and India, which are two key countries of the BRICS, if they can stop this system from working, this LBMA, COMEX, ETF, silver gold price suppression mechanism, if they can shove a wrench into the gears of this system, it would basically accelerate the collapse of the dollar. Is that right?
You're right. But like for the longest time, what I couldn't really get past is that because China is the manufacturing hub of the entire world, right? So it's actually beneficial to China to suppress the price of silver for the longest time.
Oh.
Okay, makes sense, because it's an input cost. But then, and then there are, I got Chinese friends, and I've contacts in China of people who are actually involved in the commodities trading, and these guys, and they're also very close to the Chinese government and industries. They're more close to Chinese industrials, so they come to me and they say, "Hey, Eric, in a perfect world, China would love for the price of gold to go to $8,000 or $10,000 per troy ounce, because that would do exactly what you just said, Seth. That would dethrone the, like, they'll, not really dethrone the US dollar, but like they want the US dollar shackles to be loosened from the wrist, right? They want to get away from that prison. And the way to do that is to let the price of gold go up. But, these people continue on telling me if in the perfect world, they want the price of silver to remain below $50. So in their perfect world, the gold silver ratio will be like around $200. 200, sorry.
That makes sense. Okay, because gold really is just, it's a tier one asset. It's a store of wealth. It's not used in manufacturing the way that silver is. Because I know that you've seen in the past decade, 5-10 years especially, you've seen the central banks, the sovereign banks, have been buying gold in historic records. And I think that China's been buying far more than what we know publicly. And so but also it ties into the whole idea of the capital rotation, right? That you're seeing a lot more countries moving away from the dollar, going into these hard assets like gold. And so I guess from that perspective, you look at how much gold China has been buying, and not just China, but the other banks as well, and countries, that while the price has been suppressed, they know that they're buying an asset that is far undervalued. And so I guess if you look at right now that this system is breaking and it's being allowed to break, I think, by China and India, which we can get into that, is it almost as if like the window is closing, like this window of cheap gold and cheap silver and unlimited dollars is closing, and they've kind of used it as much as they could while they still could. But do you think that they now see that window is closing and that we're seeing the end of the dollar, and now that they're making their move?
I don't think they like I said, I keep saying this. I don't think the dollar is ending. I think what they're seeing is that the the world where the U.S. is the dominant political entity and the police of the world, so to speak, right, is coming to an end. The U.S. at this point on, because the global South, like I said in the beginning of your show, is not massively adding to their U.S. Treasury bond holdings, which is basically buying U.S. debt. They're not adding to that. The U.S. is really trying to defend itself from imploding, because as we know, Seth, like the U.S. debt is going parabolic.
Exactly.
Right? It's $40 trillion, right? So what the US is trying to do, I think, at the same time that the BRICS countries are trying to do, they're trying to hoard real things. So that if this situation get out of control, I'm talking about the US debt going parabolic, and something happens to the global system that is dominated by US dollars and US debt, there's something that they can fall back on. I think that's what we see, which goes back to your capital rotation concept in the beginning of the show.
I see. So it's almost as if these countries they're seeing this unipolar system is fracturing, and with the fracturing of that comes the fracturing of in essence, the debt-based system, the paper-based system, and that the countries almost unilaterally are moving into hard assets for security, which I guess takes us to one of the other points I wanted to kind of talk to you, is the fact, which this is major news, it just came out, that the fact that the U.S. now working together with JP Morgan, right? So it's financed by JP Morgan, jointly owned by the U.S. DoD, is now in essence building a $7.4 billion smelting factory in Tennessee. So do you want to explain what this means to you? Because this is significant, actually, that we're seeing this.
Well, yeah, it's the DoD is basically the people who are actually doing it is Korean Zinc, like the smelter Korean Zinc. Is actually building this facility, and why is it Korean Zinc? Because silver is a zinc byproduct mainly. I mean, there are silver specific mines, but that's the minority. The majority of silver come as a byproduct of base metal mining, like copper mining or zinc mining. So it's only natural that they're partnering with Korean Zinc to build this new facility, Korea Zinc. So it's supposed to come online by 2027 or 2028, or maybe even 2029. Like, we don't know how quickly they're going to do this, but like you said, it's significant, and it's absolutely a big signpost and critical, because it coincides with the parabolic rise of silver prices and the fact that the LBMA is now being drained to a level of, like, in terms of physical silver, of where it was in October, before like that entire situation, like entire LBMA seized up, where they basically technically defaulted to deliver physical silver. So just to make it short, I think what's happening, Seth, is that The US government, the DoD, they know what's going on. Like they are not the everyday regular Joe. They know that there's not enough physical silver in the world. Okay, for like all these high tech industries, for solar power, for EVs, especially for like weapons. Because like I don't know if you heard, Seth, but there are reports that said that every tomahawk missile has more than maybe 40 kilograms of physical silver in it. So I think what's happening is, like I said, the US government sees this and it wants to secure the number one, the physical silver, and number two, it wants to secure the processing and refinement of physical silver domestically for national security reasons.
So you mentioned a good point about the DoD, and it's also it's kind of an interesting thing to look at, right? When you think about, typically you look at silver as being, for a lot of people, they look at silver as just being, it's a valuable precious metal. You get silver jewelry, they use it in technology. But when you look at this, right, this thing right here, this little jointly owned by the US DoD, the fact that the Department of Defense is going to have a 40% stake in this smelting facility, this is war. Like this, this isn't about, the U.S. is trying to build a stronger economy and bring jobs back. Of course, that's part of the overall picture. But you mentioned the Tomahawk missile, but you've also mentioned data centers and AI. And that's also, I would say that right now there is absolutely an AI arms race going on, as United States is putting significant investment into AI data centers, as has China, right? And I think that AI is where a lot of the kind of like the war of this century is going to be playing out. And so if you look at all these things together, what I'm seeing is that silver is not just that, countries need silver for manufacturing televisions for people to make money selling TVs, but that it's almost as if we're looking at, say, this is like, leading up to World War II, and you're seeing a mass grab for lead to make bullets, right? And it's like, oh, okay, leading up to World War II, wow, the United States just built a massive lead smelting facility. It's like, oh, it makes sense because the U.S. is going to war and they're going to have to make billions of bullets. And so it seems like that's what I think what you're seeing signaled across all this is that we're seeing this splitting, going from this unipolar world to the multipolar, and that you're seeing both sides really positioning themselves for war, whether that war is through building Tomahawk missiles or building AI data centers.
I think you nailed it, Seth. I think that's exactly it. It's a race for things, like I said, race for things they cannot print, that they need to physically be in possession of in their own jurisdiction. And that's what this is all about.
So how do you see this affecting the silver price? Because it feels like we're just at the beginning of this. As much as it, people look at this and say, oh, well, silver's a bubble, it's going to come back down. It's like, you could arguably say something like Bitcoin may be a bubble, right? Bitcoin, obviously, maybe it has certain purpose as a reserve and as it relates to financial warfare, but it's very different than silver, which, only so much comes out of the ground. Only so much can be processed. So, right now, silver at $81 an ounce, which is also, we're acknowledging the fact that silver is still at that 374 to 1 ratio of paper to physical. So, putting all these things together, I remember, a couple of years ago when I'd hear people, whether it was Cliff High or Bix Weir or other financial people saying, oh, silver's going to hit $500 an ounce. Like when silver was at $20 an ounce, that seemed so wild. I believed it because I saw the bigger picture, but it seemed like, maybe like in the far future when we're flying around in like, flying cars. But I mean, it just seems like silver could just keep going up. I don't think it's a bubble the way that a lot of people have been referring to it. So, what are your thoughts? Like what could the real price discovery be of silver over the next couple of years?
Well, I mean, look at the numbers, right? My friend PM Buck, he's a very knowledgeable account on X that constantly calculates the actual free float of physical silver at the locations that we mentioned on the chart that we showed your audience. So at the LBMA right now, he calculated that the physical silver free float is at around 3,554 metric tons. So what does that number mean? The last time the LBMA blew up because of physical silver shortage was in October. I don't know if you remember, but like I said, the LBMA essentially technically defaulted in the form that JP Morgan, as reported by, I believe it's either Bloomberg or Reuters, reported that JP Morgan actually requested its Indian customers to wait 60 days on top of the original delivery date. So T plus 60. Okay? 60 days more to the original delivery date. And back then, when that blew up, supposedly, the amount of physical silver that the LBMA had was around the same level, 3,500 metric tons. So we're there again. So what does that tell you? That tells you that a physical silver liquidity crisis may be just around the corner at the LBMA. And also, I didn't send you this chart, Seth, but the lease rate at the LBMA is back up to around 8%. So I don't know if your audience understand what the LBMA lease rate is. That's basically the interest rate that the bullion banks and their counterparties pay each other to lease physical silver at the LBMA, like borrow physical silver.
And so the 8% indicates a shortage. Is that correct?
Yeah, because normally it's like, historically it's like almost a zero. It's 1%, it's below 1%. Now we're back up to 8. And back in October, it was around, it got up to like at one point, David Jensen said, got up to 200% per annum. So now we are back to 8% from 3%. So, like I said, it's indicating everything is tight. So I agree with you. I don't think this is a bubble. I think we're just in the beginning of, physical silver repricing to the fact that the world is now heading into a multipolar arrangement instead of a U.S. hegemony.
Interesting, because it's almost like the visual I have in my mind is you're looking at this when we're in a unipolar system. It's almost as if, again, just to simplify it, if you have one dealer that is selling cars in an entire region, they can really set the price of those cars. But as soon as you have two, as soon as you have that competition emerging, then you have real price discovery. And so it's almost as if for so long, there's been one main group controlling the price of silver, right? And gold, right? And it's been this conglomeration of these Western powers. But now that the world is splitting, you're seeing that not only is the analogy of, okay, now there's two different dealers and the price discovery is going to emerge from that perspective, but it's almost as if you're now realizing that splitting also builds massive military competition between those two regions. And this metal, silver, just so happens to be one of the most critical elements in the war between those two regions, right? So it's like, what comes next? It's like, I guess it's anyone's guess.
I think, Seth, I'm just gonna, make a prediction. I think the silver price may cross the $100 per troy ounce mark, probably within the next 6 months, or even sooner, maybe in the next 2 or 3 months. Silver will be above $100 per troy ounce.
Yeah, I mean, I'd say that just looking at the past 6 months, it's easy to imagine a scenario like that. I mean, I'm hearing people say it could be $200 an ounce by the end of the year, which again, given the information we've laid out today, it seems like it's not a crazy theory.
I think it's absolutely achievable. And another thing, I mean, there's so many different crosswinds that is pushing the price of silver up. Another thing that's happening is that China, on January 1st, just started export limitation or export control on physical silver exports. I don't know if you're aware of that or if your audience is aware of that, but that's a big deal.
Yeah, actually, I've been following that, but explain a little bit to the audience what happened and what does that mean?
So basically, I'm just going to read off the English translation of what is going on to your audience, and I'm going to explain it. Okay? So China's new silver export control starting January 1st, 2026. Number one, the previous quota system is abolished and replaced with a licensing system requiring case-by-case approval. Each export shipment must apply for a license individually, with reviews covering the buyer's background and compliance of end use. Number two, only enterprises with an annual production capacity of 80 metric tons or above, or 40 metric tons or above in western regions of China, and a continuous 3-year export track record can apply for qualification. And then they also added that silver is a critical mineral, along with platinum and the third metal, I forgot what it was, but like basically it classified all three as critical minerals that are essential for Chinese industrials. So what does this mean? I mean, it's pretty straightforward, right? Like before, it's in a quota system. So you get a quota and then you can ship out within your quota. There's no delays, no more scrutinization at the border. As long as you have your quota and you're within your quota, you ship it out. Now it's on a case-by-case approval basis. So that's pretty crazy. That means every single time you ship silver off China, you need to get approval from the Chinese government. Does that mean that it's banned? No. But does it mean there's going to be delays? I can tell you this. Of course, there's going to be delays. Like I said in the beginning of your program, I was in the contract manufacturing business for over 2 decades. So part of my role is to make sure that whatever products that we manufacture for our customers get shipped out of China. I had to deal with Chinese customs. And if you have a case-by-case approval situation going on, there are going to be delays. And there are going to be probably many instances where you cannot ship because Chinese customs simply deny your application for export approval for the physical silver, because it either the Chinese government either doesn't trust you or doesn't trust the your compliance of end use, or just simply doesn't approve of the end use of the silver outside the China.
Which this makes sense if you look at it from the perspective that silver is a material that is used in war. And if they don't, because I know that a lot of these silver refining globally, a lot of the silver comes, global silver supply is coming from the refineries in China. And so if China is really kind of positioning itself for, again, this multipolar world, to me, it makes perfect sense why they would put these restrictions in place and say, oh, this company that wants all this silver, they do a lot of contract work for the DoD. Nope, you're not getting any of that silver. But it also makes sense why the U.S. is putting $7 billion into its own domestic refining. Because again, you're seeing all the writing on the wall of showing a fracturing of this global order.
Well, Seth, also, look at what's happening at Venezuela. They just went in and took Maduro, or Maduro calls it kidnapping, whatever you call it. The U.S. went in and took their president, the head of state. Some people say that he's a dictator. Whatever, it happened. And what's the next thing that can happen? They also, by the way, Seth, the U.S. Navy confiscated 2 oil tankers that were heading from Venezuela to China. So if they can do that to Venezuela, and they can do that to these oil tankers, they can do it to the silver that China is buying from these Latin American countries, which China buys a lot of, right? China buys, unrefined silver from countries such as Peru.
Yeah.
Directly. So maybe, what China is doing is kind of like a preemptive response to this, is seeing the dangers of a silver supply flow getting cut off by the US. So it's basically preemptively stopping or limiting the outflow of physical silver from China to the Western world, starting now.
Yeah. It's interesting because I've covered this a lot. Just the idea of the BRICS nations versus the Western bloc of nations. And Venezuela, obviously their oil reserves are massive. We know that, trillions in oil. And again, you look at metals, etc. When I heard the news of Maduro being captured, I didn't look at it as the United States just seizing, a nation or capturing a dictator, as they had kind of positioned the story. I looked at it as the Western nations, right? We're talking United States, Israel, NATO, etc., seizing a key nation that supplies very, very important materials. I saw it as them taking that nation out of the arms of China and Russia and the BRICS nations. That's how I looked at it. It's a much bigger chess move in this global I guess reset of the world order.
Absolutely, I agree with that, Seth. I think that's, like I said, I think that's what's happening. Is part of the globalization. It's part of the U.S. as a global hegemon. I wouldn't say retracting, but it really is, right, because it knows it can no longer control the BRICS countries and the global South countries like the way it did. So the next best thing that the US is trying to do is to try to secure the physical critical resources that it cannot print. While it still has the advantage of being number one in the world militarily. I think it's the natural thing that they're doing. And then, the BRICS countries, they see that. And of course, they've been doing it already because they want to get away from the US dollar. The entire process of the entire world trying to grab the physical resources just accelerates. It's kind of like I put up a picture on my X account. It's kind of like a game of musical chairs. The music just got a lot faster. And we are really at the end of the phase where, the kids have to fight for the remaining chairs that is out there.
Yeah. So the music is stopping.
Correct. Yes.
Yeah. Wow. Well, Eric, this has been a really, really fascinating discussion. I've learned a lot as I always do when I discuss these topics with you, or when I'm following your information on your Twitter account. Thank you for giving us your time. It's exciting times that we live in. It's also kind of scary times that we live in. There's a lot of global uncertainty, a lot of big things happening. But I appreciate what you're doing. I appreciate just you putting together this information and being willing to come on and talk about it, because not only is silver something that is something you can look at as like, oh, it's a good investment, right? That's the most simplistic way of looking at it. It's like, oh, okay, well, if I can buy it at 30 and it goes to 50, hey, that's great, right? That's a very simple thing, but there's so much more going on that it's important we don't miss the bigger picture. So thank you for being here to explore that together with me.
And Seth, thank you very much for having me on your show again. It's a pleasure. Thank you.
Thank you very much. I'll make sure to put your Twitter link in the show description. And aside from following you over on Twitter, which I don't like calling it X. I feel like X is a way of dehumanizing us. It's like, I like Twitter. Okay, so I'm kind of stubborn. I'm like the old man that's like, you young kids with your MP3s. I got my record player, right? So anyway, I'll put your account on there. But aside from following, is there anything else you'd like to recommend for the audience?
I'm also on Red Note at King Kong 9888. So your audience, if they're in China, okay, because you have an audience that is worldwide. If they're in China, they can follow me on Red Notes as well. Or I always do a lot of appearances on different YouTube channels. They can type my name in on YouTube and my videos should pop up.
Perfect. Well, Eric, it's been great talking to you. Thank you again. And maybe, in a few more months, we'll be doing this again and we'll be saying, oh my gosh, Seth, last time we did this was in January and silver was only at $80 an ounce. I mean, you never know.
As amazing as it sounds, Seth, that might be the case. I mean, the last time we talked, it was at 35, and now we're at 80, heading to 100. So anything is possible when it comes to silver.
It is.
Yes.
It is. Well, thank you very much, Eric. Have a wonderful evening. I know it's nighttime for you, so thanks for staying up and doing this with me, and I look forward to next time.
Okay. Thank you, Seth.
Thank you. I hope you enjoyed that discussion with Eric. I know it was pretty technical, but if you look at how important the role of silver is in geopolitics and understanding what's happening right now, I think it's helpful to go into the technical stuff. And I try my best, as I usually do, to try to come at it from a very basic understanding to make it easy to understand, because this is very complicated information, and understanding the mechanisms of the LBMA and the COMEX and the Shanghai Exchange. It's really complex stuff, but I appreciate Eric's ability to help break it down in a way that makes sense. One thing I will say is that, I've been talking about precious metals really almost since day one of the show, silver, gold, and it's something I still believe very strongly in. My mother, I was talking to her recently, and a lot of the silver that she bought it at, $25, $30 an ounce. And she's just saying, Seth, oh my gosh, look how much my silver is worth now. And that's exciting. And it feels like it's gotten very expensive, which it has relative to, what it was even a year ago. But, I just bought more silver over the holiday break at, I think, $71 an ounce. I remember thinking, like, gosh, am I crazy? But here it is, at $10 more an ounce. And I know towards the end of the show, I was asking Eric, what does he think silver could go to? And it's a question that, nobody really has the answer to. It's not an easy topic. A lot of people just say, look, it's going to become unobtainium. That's just the response, is you won't be able to get it. But it was interesting. I feel like he was, very responsible and conservative in saying that it could hit, $100 an ounce plus in the next couple of months potentially. But just before I recorded this outro, I was just doing a little bit of research, and I saw it's pretty wild that if you look here, a Bank of America analyst, one of their key analysts, put this out that he thinks that silver, look at this, says gold will be the primary hedge and performance driver in 2026. Silver could top out between 135 and 309. So this is wild. I mean, this is, again, this post here, this is from Silver Trade, says that silver could top at 309 in 2026, according to Bank of America's Widmer. He says the fact that a bullion bank with one of the largest legacy silver shorts would allow one of their analysts to publish such a silver outlook for 2026 tells you everything you need to know. And I do happen to agree. I mean, look, no one knows. No one has a crystal ball. But if you look at all these elements together, if silver's well into the triple digits by the end of the year, I won't be surprised. I'll be happy. But I'll be looking back at myself thinking, gosh, Seth, you were so silly for thinking that it was too expensive at 70 an ounce. The same way that I remember when I bought silver, I think it was back at $35 an ounce at one time. I was thinking, gosh, am I just like a silver bug? Have I lost my mind? But again, you look at all these mechanisms that are moving, and it makes sense. So I did ask Eric offline. I say, hey, are you buying silver or gold? And he said in the past couple of years, he's basically only bought silver, and that's been my position as well. Gold's obviously gone up, so I'm happy that, I bought some gold around 3,000 an ounce and 3,500 an ounce. And so it's nice to see it going up, but I think that silver has so much more potential. And that's what I, gather from a lot of the research I've done and people I've talked to, like Eric, that, say gold could double, right? To go to 10,000, but silver could go to, it could double or more, right? There's a lot more upside, especially as you're getting closer to the more traditional silver to gold ratio, which is, it's historically been closer to say 1 to 15 or so, meaning that if gold was at 10,000 an ounce, silver would be at 1,500 at 1 to 15 ratio, which is not out of the question over the next few years. So anyway, just want to say if you're buying silver or if you look at silver or gold, this is not financial advice, right? So these are my own opinions. So personally, I would aim to kind of go much more towards silver for a lot of the reasons we've discussed. But just be careful out there. There are a lot of even coin shops that don't know that if they're selling you something that is fake. Typically, it's not as common to have fake silver. There's a lot of work to fake silver. You still get it sometimes. It'll be plated something. It's much more common to have, say, a tungsten-filled gold bar or gold coin. So you have a lot more fakes showing up in gold. Because it feels like in a different lifetime. I used to have a business. I was buying scrap jewelry and bullion and whatnot. And so I ran across a lot of fake metals in general. But just be careful with where you're buying. There's a lot of good websites out there that you can just buy direct if you want to. But there's also, if you have a local shop that you can trust, that's also great. If you are not sure where to buy or you're looking for a recommendation, I recommend to my friends and family and obviously to you, Noble Gold. So Noble Gold, run by Colin Plume, who's a good friend of mine, solid company. You can call them up and within 15 minutes you can say, hey, I want to get 500 ounces of silver, generic rounds. They can fulfill an order like that, get shipped out very quickly. So they do that. But the other thing is that they are, in my opinion, the best when it comes to IRA and 401k transfers. So if you have, a good chunk of money sitting in an IRA or 401k and you want to transfer it into precious metals that you actually own that are yours, without paying all the fees, thanks government for charging all these stupid fees and taxes. But if you want to do it, there's ways to do that and not have to pay the fees. So you can take some of your 401k that you haven't been touching, and you can actually move it into physical silver that you will own that's stored in a third-party vault. That's how you get around those fees and everything. But you can go and inspect it, and you can say, okay, these are my exact bars that I own. And they have a way of doing that that's extremely efficient. And again, you won't have to pay those fees. So make up your own mind, do your own research. Like I said, for me, I just bought more silver at $71 an ounce. I'll probably buy it at $90 an ounce. That's just my own belief. When I see these bigger factors happening, I just, I don't see it going down. Now it might, you always have pullbacks. It could absolutely go down. So, there's no guarantees in this, right? That's just the reality of it. But when I look at all the factors playing out, geopolitically and just so many things, not to mention the breaking of the mechanisms they've used to suppress those prices, it makes me very, very confident in it, which is why it's, for me, that's my main store of value for my family, is that. So anyway, the link to get to the Noble Gold website is goldwithseth.com. I'll put that in the description below. The phone number is 877-646-5347 if you want to call them instead. So again, hope you enjoyed that discussion with Eric. Smart guy. If you did enjoy it, please share it with your friends and family. Help get this information out to more people because it's important. And I appreciate you being here. And yeah, thank you. And I'll see you again soon.